So I've got 3 subjects to run through like I've done previously, and I'll break each one down and really just think through or reconstruct how I see things with a number of different subjects. The opportunity to speak for this solo episode has come about literally in the last 5 minutes ago. I logged in to do a recording with Laura Tynan. Shout out to Laura, who'll come on at some stage, I'm sure, to see an email that said power outage. I'm like, oh, shit. Well, there goes the podcast episode for the evening. But as you guys know who've been following along, I'm taking these moments of guest management, let's say, like people's lives change, right? Things happen. It's unpredictable. And I don't want to be in a state of stress with my guest list, which in the past is something I'd fretted about a lot. It's like, okay, how can I improve on this? It's like, well, actually, this is an opportunity for me to speak. And so far, they've been really well received. So thank you to anyone that's tuned into a previous solo episode. Okay, so putting that aside, shout out to Laura. I'm actually going to make that point number 2 because she's got some really cool content that I saw earlier today. But first of all, shout out to James Lavish. And I'm going to run through a recent newsletter that he created. His newsletter, The Informationist, absolutely excellent insight from a professional investor and what they see going on in the world, in particular with a Bitcoin lens. Point number 2 is actually going to be Laura and some of her content that I went through today. She has a focus on females and investing. And it was interesting. She said, Jake, do you want me to come on the podcast? I see you've got a lot of Bitcoin related stuff. And I'm like, yes, absolutely. I'd love you to come on. So we will do that conversation at some stage. But she was sharing some cool stuff around mindset and having worked in corporate finance for a long time. What do the wealthy do? And then finally, just something more on the spiritual side, which is about letting the dust settle and how you can make decisions when that's the case. So first, I'm just going to pull up James's previous newsletter. We'll pop this in the show notes for anyone that is tuning in. The title is Bitcoin and Risk-Adjusted Returns. So James, I have recorded a couple of episodes with him now over the years. Awesome guy who I highly recommend, becoming a paid subscriber for his newsletter. It's every Sunday and super simplified, but deeply insightful information about how investors think and how he sees the world. And there's a story in this particular newsletter that to me I love this kind of insight as a retail investor who is risking my own capital. It's like, what would a professional do in this environment? Who is highly trained and how do they make decisions? What sophisticated analysis are they able to do to make good decisions? And it's not always that easy to find this information, but you can. And that's the fun bit, right? Is we can go out and we can actually do things on our own behalf and go and find this stuff. And, at the end of the day, the beauty is if we fuck it up, our money's gone, right? Anyway, he is talking about something called the Sharpe ratio. And to break it down really simply as to how I see this, it's like, on the one hand, you want to make as big a return as you possibly can for every dollar that you put into something. But obviously, you're going to get a different risk profile with different things. And so it's like, okay, what is the best risk-adjusted return that I can go and find? And the Sharpe ratio is essentially a metric that helps you understand that. And I'm thinking through some examples. Okay, so I could go to a racetrack and I could gamble on a horse in a horse race. Now, someone with better information than me might have a lower risk profile when they look at gambling on horses, but I would put that as pretty fucking sketchy. Now, the idea of going into a casino, right? The house always wins. Investing in many ways is just betting, right? You take a bunch of bits of information and you make a decision about where to put your money. Now, if you buy an equity, it's different to buying a bond. It's different to buying a classic car or art or equally Bitcoin. And those are all different points to make about the type of assets you can put money into. But the point is just how fast can this asset grow in terms of the dollar value? And what have you got to give away in terms of risk to get that potential reward? And so James does a brilliant job of just running through where the Sharpe ratio came from. Originally, it was essentially a mathematician, and it completely revolutionized modern portfolio theory. And it is actually an algebraic formula that, in some ways you look at it and go, oh, what's that? But really, it's very, very simple. And I just love this kind of stuff because what they basically go on to say and mention is a project called the Nakamoto portfolio, which is something I've referenced in the past. And it's basically another great story, actually, where there was well, I forget his name now, damn it. But I've watched him on some podcasts before, and he was working at Swan at one point. But he worked in the investment industry, and he just was always like, yeah. Once he grokked Bitcoin, he was bullish on Bitcoin, but none of his mates got it. He's like, okay, and he created a portfolio that was basically just Bitcoin, called it the Nakamoto portfolio, made it look like it was a hedge fund pitch, sent it to his mate, who was like, what about this fund? And the guy looks at it, he's like, yeah, keen, having always dismissed Bitcoin. And then suddenly he's like, hang on, this is the Bitcoin return. And the point is that the word Bitcoin, it like winds people up. It gets up their sleeve somehow and just like, I don't want to go near it. It's all of the fear, uncertainty, and doubt that flies around that people don't like it, right? They've been told not to like it. It's unsurprising when you start digging into the roots of central banking and how the ability to print your own money means you can influence the media, the academia. Putting that particular subject aside, it's a brilliant story because it shows that professional investors like the risk return profile of Bitcoin. They just don't like the word Bitcoin. Long story short, go to the Nakamoto portfolio website. You can dig through all of this, and it does a great job of comparing Bitcoin to real estate and other different asset classes. Again, coming back to James's newsletter, why this is important is because a portfolio can be judged based on its Sharpe ratio. And so they will look at a fund manager's decisions and be like, okay, where have they put all this money that they're managing? How much gain did they get for what risk? And someone might get a great gain in any 1 year, but if their risk is too high, that's not good enough. Yeah. And they'll get tinned as a result. So these fund managers, these people allocating money for insurance companies, for pension companies, the different kind of, let's say, guidelines that a fund manager's based under. And what really comes through here is that Bitcoin is an amazing tool for any one of these fund managers to allocate into because it improves the Sharpe ratio of the portfolio. Now, there's a really great stat towards the bottom where he's looking at how much Bitcoin to actually add. And it's quite crazy because actually the bigger the Bitcoin allocation, the better it returns. So it's like, oh, hang on, like 1% is definitely good, but actually 5% is better. And if not that, actually 10%. You're like, wow, okay, cool. Well, this is where it starts to get really interesting. Like, how does a professional investor justify buying Bitcoin? Well, they could run through this framework and be like, well, it actually makes a hell of a lot of sense to do that right now. And I think that's the point that we're at here. And that's what I want to share is that the professional investment market is finally catching up to Bitcoin. And the cool thing for us as retail investors, we've been able to front run these guys. I saw a great stat recently that something like, maybe I'll dig it up. I'll have to find it. But like 50% of hedge fund managers own Bitcoin personally, but only 3% of funds actually carry it, I think was the stat. James's newsletter is excellent. I highly recommend you subscribe because it helps me to see a world that I'm not professionally trained investor. And I never will be, for that matter. I'm not going to go manage someone else's money, at least not in the near term. And I want to know what to do with my money. Like, what are the best decisions I can make? And when I get information like this, it helps with improving my toolkit, essentially. Now, James goes into more details about something called the VIX, which is to do with volatility. He touches on MicroStrategy and how MicroStrategy is managing to sell Bitcoin volatility as Bitcoin yield. But what's fun to think through here is it's like, okay, well, if Bitcoin is a $2 trillion asset, there's $900 trillion out there. Who's in control of that money? Well, the truth is it's a small percentage of people of the total population. And you've got a difference, keep in mind, between the owner of the asset and the manager of the asset. And so, yes, there are crazy stats out there that show you like, a small percentage of the total population own everything. But keep in mind that money, they might own it, but they don't necessarily in control of it because it's in businesses as equity or it's in funds as capital allocated. So you can't necessarily turn around to your fund manager and tell them what to do with it tomorrow because you've actually made the bet that fund manager is going to look after you in whatever format that might be. It could be a venture capital fund. It could be a private equity fund. It could be just a standard kind of wealth management financial advisor type setup where they've gone for a 60-40 bond allocation, stock bond allocation. I don't know, but the point is that the $900 trillion out there that's not Bitcoin is going to be managed by a handful of people. And so if you're looking at when the Bitcoin price might run even higher than it has so far, it's like, where's that actual capital going to come from? It's got to come from somewhere. Well, I know that Bitcoin performs better than real estate as store of value. And I know that it performs better than bond as store of value. So I see those two big buckets as huge capital outflows into Bitcoin. So inflows to Bitcoin, outflows from bonds, outflows from real estate. But the people that manage those assets are a small handful, right? And so they're going to sit there and they're going to say, okay, we've got this portfolio of assets today. We think it's worth this. We think we've actually grown in value over the last year by this. So, okay, how much risk did we have to take? What were the risk-adjusted returns like? And what was the Sharpe ratio? And I actually, shout out to Andy Edstrom, reading his book, Why Buy Bitcoin, all those years ago now, which I can't even remember when he wrote it, but I would have read it in probably 2020, 2021. It's the first piece of Bitcoin content I came across that had been written by a professional money manager. And so he was talking a language that I was used to hearing from people I'd hired on my wealth management journey. And I was someone who's obviously inherited money, and I knew that I had to do something with it, but I didn't have the skills to do it myself. So I had to outsource it. I had to give it to someone else to manage it on my behalf. And so, okay, when you do that, that person is then going to try and use sophisticated tools to make sure that they return their money to their client, and also they get paid themselves. So shout out to Andy for first being the person that really drew my attention to the Sharpe ratio. But here we are 5 years later, and it's more relevant than ever before, because all these people that control the $900 trillion worth of assets out there are using these kind of metrics to decide whether Bitcoin's a good idea or not. And it is a good idea through this traditional lens. And again, you go back to the Nakamoto portfolio, go and have a look at how it levels up against these other asset classes. It's absolutely mad how well Bitcoin actually does. So at the end of the day, like, this is super, super bullish. And this kind of language is the kind of language that these sophisticated professional investors use in order to make decisions. And again, for us as retail investors, like, it's awesome stuff, basically. It's like, okay, I can just go and buy Bitcoin, and I can know that I'm getting as good a risk-adjusted return as any professional out there is trying to get. And most of them can't even get close. Some of the different metrics that James is looking at, that, Bitcoin's twice as good. It's absolutely, melting faces, as they talk about. So yeah, that's a really cool thing to read into. And as someone who likes to leverage other people's expertise to make decisions myself, this is just the kind of insight that I like reading about. When I'm like, okay, I knew about this, but it's helped me see it in a slightly different way. And it's why I like to pay for some newsletters, because you just get some great insights that, Monday morning, I'm like, yep, let's bash through my emails. Oh, this is cool. Caught my attention. Boom, boom, boom. Suddenly you have a deeper insight on something. You feel better informed. And my conviction is as strong as it's ever been. The key takeaways for me: institutions are being forced to take notice of Bitcoin due to their portfolio construction metrics. Bitcoin is good for any portfolio. As retail investors, Bitcoin allocations mean we can get risk-adjusted returns that even sophisticated professional investors struggle to attain. Epic. Okay, cool. And so point number 2 today was going to be my guest, Laura Tynan. So Laura, shout out to you, and I look forward to speaking when we can. And shout out to Jin for introducing me to her. But I watched a video of Laura's today, and again, I'll link this in the show notes. So, basically, I put a shout out to previous guests, my first 50 guests, or first 50 episodes, the guests in those episodes, saying, I would love you to introduce me to someone that you feel would be a great guest for the podcast. And I didn't say they needed to have hundreds of millions of followers. I didn't say they had to be into Bitcoin. I didn't say they had to be anything specifically. More just like, does anyone resonate for you after your experience of coming on the podcast that you'd like to see me interview? And Dr. Jin Ong came on the show, and she was one of the people's, and she's put me in touch with Laura. And Laura will come on. Anyway, let me just pull this up. So Think and Grow Rich Like the 1%. I will put this in the show notes. It was really cool to see someone who's obviously gone out there, taken their expertise and decided to like basically fuck the corporate world. I can't do this. I need to do something for myself, and bet on their ability to do that whilst using content as a way to drive business. And so it's obviously something that I am very much trying to do through my podcast. And I'm always looking for inspiration from different places. Like, how can I do this differently? How can I do this better? Who can I learn from? And my current strategy is still what it was 6 months ago, which is essentially just focus on one-to-one conversations as a podcast. And whatever I find interesting is a bar that is high enough to qualify to be a guest. Again, you don't need to have a big social media following. Anyone listening now that thinks they have a story that they'd like to share that I'd be interested in, like, please do reach out. Like, I had James on the show, and James was a guest, an audience member, and he reached out to me with some of the problems he was thinking through as a real estate investor and stuff I'd shared, and suddenly he came on the show, and it was really awesome bit of kind of market feedback, reverb, so to speak, of what I'm working on and how it resonates with people. And Laura, she's teed herself up, and this is what we'll talk through in the podcast because I'm keen to learn more, but 10 years in corporate finance, worked with wealthy people, and understands their approach to how they manage their own wealth and how they approach to money. And she's then decided to strike out on her own. And from what I can tell, at least thus far, she has a monthly membership program, and she has a masterclass product that you can learn from her, and specifically focused on women. So helping women invest for the first time or invest properly. And it's a really cool niche because it's obviously like high demand. She has been through the process herself and therefore is able to teach. And I love that, right? It's like, where did you have a problem that you managed to solve for yourself and that you can help others learn? And that's what this is all about, right? Is if you can create value for people, then value will return. And that's what was fun about this video of Laura's, because it really hit home to me in a few areas that I loved. Basically, you want to be an asset owner. That's pretty obvious, right? You don't want to be out there consuming and not have any savings, right? You want hard assets. Where I will undoubtedly be talking to Laura, as you can probably guess, is around Bitcoin. It's like, well, have you considered Bitcoin as part of this problem? And could it be a solution to some of the things you see? But there was one point that she made in the video that I think was the most fun, which was really around what I call, or have heard termed, action leads to clarity. And this idea that we can sit around all day long with an idea and we can try and get all of our ducks in a row in order to like action that idea, but we never do it. Like, no one does it. They just sit around in the same job, doing the same shit every day, being like, oh, I think it's a really cool idea, but they never actually do it. So to me, that's the key, right? It's like, how can you go out there and say, oh, do you know what I'm going to do? I'm going to actually take some action. And with that, you get these points of feedback. And so I'm yet to hear, Laura's actual story about how she's done what she's done and who the kind of customers are that she's dealing with and how her business is going. That will all come in the podcast, I'm sure. I believe that Jin is a customer of hers and joined her program, which is really cool. I'd love to hear from Jin someday in the future what she gained from that. But it's this idea of micro communities and why wouldn't you pay to play? Like, I would 100% pay to be mentored by certain people. And so why wouldn't you set up systems in which you actually sell your time, which is really you're selling results through the use of content like this is how you might attract a new customer. But I see from some of other Laura's stuff that she has done some work with a guy called Bob Proctor, who is really a disciple of a very famous book, which was written by Napoleon Hill called Think and Grow Rich. And I think that's what a lot of this action leads to clarity kind of concept derives from, where it's like everyone, like, ideas are cheap. Like, ideas are so goddamn cheap. Execution, on the other hand, is not. And so the process of going through ideation and saying, okay, do I like to do this? Will I like to do this? Am I the right person for this? there's a whole bunch of steps you can go through to kind of de-risk an idea in a sense. And very quickly it can become clear, well, this isn't the right idea for me. And actually it's striking me now, like there's a couple of things. With Jason, my mentor that I've been working with most recently, we've worked a lot on the idea of a self-image. So it's like, what does the future Jake actually do? And in the past, I got caught out with opportunities that arose that weren't actually part of the self-image because I hadn't written a self-image. I hadn't decided what that self-image was. And I was like, oh my God, I've manifested this opportunity. How cool. And to me, actually, what I've learned since is a more sophisticated approach. It's like you have to have a very, very detailed and specific ideas to like who the future you actually is. And it's not about being like one specific thing. You can be multiple, right? And people build these incredible self-images of a very complex future picture. But if you don't have that in mind as to what you can get to, you'll never get there. And Bob Proctor, he teaches a very similar philosophy, which is this whole idea of think and grow rich. It's like, okay, well, how can you put a time, a place, a specific figure in mind in the future? And then it's the journey there that with the target in mind means you can basically attain anything. And I think this is what Laura really got on point, which is your mindset is absolutely everything when it comes to wealth. And the amount of money floating around out there in terms of value that you could attract is like, you can't actually put a number on it. It's so much. Yet we spend so much of our time with a kind of scarcity mindset, being like, oh no, I can't do that. Or, I'm not the person for the job, or maybe I just quite like what I'm doing now. And you get stuck in these like boring kind of cycles where nothing really happens. It's like, okay, well, how do you strike out from that? And this is where action leads to clarity. So it's like, okay, make a decision. And as you make a decision, then shit starts to happen. And it reminds me as well of some stuff that Jason's been coaching me through, which is about your vibration frequency. And there is a kind of universal consciousness or intelligence out there. And it's always looking for vessels for these ideas or these pockets of information to become reality. And with this concept, it becomes really clear that some ideas are for certain people at certain times. And you as that individual might rise up to a point of vibration where it's like, okay, this is a cool idea, but you can't sustain that level of frequency. And so you drop out of it and the idea drops away. So the ideas are looking for people to express them. And that person has to be in the right frame of mind at the right time, in the right skill set, with the right skill set to actually do this shit. And this is kind of what's so cool about it all. It's like, how does anything ever get done? And what was evolution? And how did we even get here? And that's like, that's not even a whole nother podcast episode. That's a whole nother series entirely, which maybe we'll get to someday. But I just really like this idea of doubling down on, you need to get up and do something. If you do nothing, nothing will happen. Nothing will change. And so don't be scared to fail. In fact, embrace failure. Do it again. Do it again. Do it again. And even for me to share now, like I had a bit of a moment in the last week where I'm like, God, okay, I've pumped out a lot of content in the last like 6 months. And, am I getting enough views? Is this actually working? How can we make it better? Oh, maybe I'm not doing it right. And this is where the self-image is so key, because you come back to like, well, absolutely, I'm going to be a podcaster for probably the rest of my life, really. But I've said like 10, 20 years, I'm going to pump out episodes because I love speaking to interesting people who are willing to share the ups, willing to share the downs, importantly. And it's just an awesome way of learning from people's stories. So, you have to take action. And someone like Laura, it's like, oh my God, how is there nothing about Bitcoin in her content? So maybe a small challenge for me. She may never see this episode, but how can I help her see Bitcoin as a solution to the wealth problem? Bitcoin solves the wealth problem. You now have a savings technology accessible to you. You don't need to know what an index tracking fund is. You don't need to know how to trade the S&P. You don't need to know how to get passive income from a real estate portfolio. You don't need any of that shit. And you can outperform all of it with Bitcoin in self-custody, kind of like what we were talking about, the risk-adjusted returns, Sharpe ratio stuff before. It's like, hang on. So all these traditional investment classes that are currently buckets of wealth that to quote Laura's channel, it's called rich life mindset. they haven't even figured out that Bitcoin's part of that yet. And when they do, my God, the price is going to run. Because they're going to be like, hang on a second, what you mean I don't have to deal with a grumpy tenant? Oh, hang on a second, I don't have to spend all day managing these companies. I don't know if they're going to be alive tomorrow. Oh, hang on a second, I can take my wealth with me anywhere at any time. I don't have to have a factory or a cafe. Like, it's going to blow people's minds as it filters into the wider society. But that hasn't happened yet. And hence we're able to front run, and hence we're able to speculate on far bigger prices today. And that's why the risk adjusted return is so extraordinary, because the adoption's still early. The risk is very low because of the counterparty of owning a piece of a software network versus whatever else you might want to own. And I mean, wow, off to the races. Very, very powerful stuff. Laura, I look forward to when we get to talk and hearing what your story is. The last subject is dust settle. This guy called David G, and I'm halfway through reading his book. I must get back to finishing it. And I was really just eating through his meditation on, there's an app called Insight Timer, and he's got some amazing meditations on there. And in fact, his book's brilliant. The story of like how he went from being a New York-based city worker to suddenly in the back end of India on a spiritual journey, all sparked from a wild afternoon where a homeless man reached out from underneath some rubbish on a sidewalk in New York, grabbed his leg, and I can't remember exactly what he said, but something like, "Is this it? What's written on your tombstone?" And like, can you imagine that, walking along the street, suddenly a homeless dude like grabs your leg and looks at you really intense and just hits you with this kind of really profound question. And it was a moment that changed his life. So yeah, note to self, get back and finish reading the book, Jake. But in one of his meditations, he talks about the ability to just wait. And much like actually in my last solo episode, when I talked about the power of patience as an investor, this is more actually just a life hack. And if you think about a puddle, and when a car has just driven through a puddle, the silt from the bottom of the puddle is all stirred up. And so you can't see through it. But if you wait, the ripples subside, the water goes still, and slowly but surely all the silt and sediment falls to the bottom, and you can actually see through the water. And David, in one of his meditations, is talking about the ability or the superpower that is waiting for the dust to settle. And if you can, then it will become obvious what decision to take. And in some ways, this is like, you see this in kind of military strategy, right? It's like, just wait, literally just wait. And the enemy itself will either fall on themselves in some way or make a fatal error. And then it's very obvious how to move forwards. And the same applies for, everyday decision making. It's like something my wife and I, constantly think about, like, where are we going to live? Are we going to buy a house? Can we possibly have 3 kids under 5 and not own property? We just came back from an awesome holiday, and we realized that we're totally capable of traveling with our kids. Like, why don't we go traveling? Now, I don't know if that's the right answer to not owning a piece of real estate, but it's just so interesting how with time, it becomes more obvious what to do sometimes. And so I would, just to throw this one out there, like, next time you're struggling with a decision or something's come up in your life, you're like, I really don't know what to do right now. And this is something I've been so guilty of recently. So I'm based in Australia, made an awesome investment in Bitcoin a couple of years ago. The purchasing power of that capital has, multipled in that time, completely outperformed Wall Street hedge funds. Fucking awesome. But what do you do with it? Do you take some profit off the table into another hard asset that you're going to need? Like, you need shelter. Don't you need it? And so I'm guilty of just going round and round and round and round in circles, on these different property websites, looking in different places, looking at different values, looking at different sizes. Do you want to build something? Do you want just land? What about this problem? What about that problem? And it's just one big clusterfuck, essentially, of hamster wheel, to quote Rob Brinded, just going round and round and round. And so the challenge to myself, I guess, is, Jake, just let the dust settle. What happens when you let the dust settle? And I don't know what's going to happen, obviously, but it feels like maybe we'll go traveling. And it feels like maybe that actually is the way forwards. And it feels like that all these deals I've been looking at and this energy I've been putting in some ways completely wasted, but in other ways was part of the process of figuring out it's not what you want. And so I've been in this like flurry of silt in the bottom of a puddle, freaking out, like, I've got to make this decision. This has got to happen. Or like, you're a man, you're a father. You should house your kids in your own home. This is mad. What are you fucking doing? You're always at the whim of a landlord that's going to screw you over in some way. And it's like, Jake, just take a chill pill, man. Slow down and don't be so hard on yourself. I love myself. You have to say these things sometimes. And certainly, like, just like anyone struggle from the process of not feeling worthy, not feeling good enough, and going, how am I going to do this? So let the dust settle is something that has really resonated for me lately, and is something that we could probably all do a lot more of, right? I'll leave that there for the solo episode today. If anyone has any comments or questions or wants to reach out in some way, then you can send me an email, hi@jakewoodhouse.io. Excitingly, I think my website is going to be now live this week, so you can get all the podcasts from the website directly, which is cool. And yeah, I'm likely to be setting up a new business in some trading. So we're going to do some Bitcoin trading, which is cool. So I've been trying to think through what are some of the ways that I've learned about since starting the podcast that would help me make more money, i.e. what are revenue streams that I can generate as a result of running the podcast. And one of those is actually from an episode that I did with Costa. So if you search Costa in my history, you'll find an episode with him. He has a business called Minotaur Trading Systems, and it's really cool. The ability to trade in and out of Bitcoin over the long time horizon that we're going to have, I think is a very interesting opportunity, in that nothing like Bitcoin's ever existed before. And therefore, if you can get ahead of the curve and find a way to basically buy low, sell high, this thing's never going to zero, ever. So if you're trading an equity, it literally might go bankrupt tomorrow, whereas Bitcoin is just something completely different. And so shout out to Costa. I'm really intrigued to learn the finer details of what it means to become a customer of that product. I will definitely do some more content around like how might you monetize a podcast. And my team and I, Pat and Michael, shout out to them. We have a few ideas, but year one was always just get your head down and start creating as much content as you can. So that's exactly what I'm going to continue to do. As and when these opportunities pop up, I will follow them too. Anyway, thanks so much for your time.